Something significant just happened in the world of blockchain payments, and if you've been paying any attention to Solana at all, you need to know about this. Because on February 26, 2026, the Solana ecosystem took a step that, on the surface, might look like just another developer tool launch. But when you zoom out and look at the full picture, the partners involved, the timing, the numbers, the infrastructure, you start to realize this is something much bigger than that. This is Solana making its most direct, most organized, most serious case yet that it is not a speculative crypto playground. It is production-grade financial infrastructure, and it wants every bank, every payment processor, every fintech on the planet to know it. So let's get into it. What exactly did Solana just launch? The team unveiled what they're calling Solana Payments, a dedicated portal, now live, that consolidates everything a developer, enterprise, or institution would need to integrate crypto payments at scale. We're talking technical documentation, network statistics, reference implementations, live examples from the ecosystem, and, most notably, a real-time transaction simulator built directly into the platform. That simulator is the part that's turning heads, and we'll come back to it in detail because it's genuinely clever. But first, let's set the scene, because the context here matters enormously. We are living in a moment where stablecoins have stopped being a niche conversation. Bloomberg Intelligence estimates that stablecoins could process more than $50 trillion in annual payments by 2030. $50 trillion. And right now, in early 2026, Solana is already processing $2 trillion in quarterly stablecoin transfers. That's not a projection. That's not a white paper promise. That is actual transaction volume flowing through this network every single quarter. The question was never whether crypto payments would arrive. The question was always which chain would capture the institutional trust, the developer adoption, and the speed necessary to become the backbone of that future. And Solana is now pointing at its report card and saying, "It's us." Let's talk about the Solana Payments portal itself. Before this launch, the information developers and enterprises needed to build payment solutions on Solana was scattered. Documentation here, third-party guides there, examples buried in GitHub repositories. It worked, but it wasn't clean. It wasn't the kind of unified, polished experience that a CFO at a Fortune 500 company looks at and says, "Okay, I can take this to my board." That's exactly the gap Solana Payments fills. The portal brings everything under one roof. You get the Solana Pay protocol flows for production-level checkout experiences. You get QR code and deep link support for major Solana wallets like Phantom and Solflare. You get direct non-custodial settlement, which means when money moves, it goes directly from payer to recipient without a middleman holding it. And you get stablecoin integration that covers the most commerce-relevant assets. USDC from Circle and PYUSD from PayPal, both natively issued on Solana. Now here's where the simulator comes in, and this is the part that developers are genuinely excited about. Historically, one of the biggest pain points in integrating any blockchain payment system is the testing phase. You build your checkout flow. You build your confirmation logic. You build your settlement verification. And then you have to test it, ideally without spending real money, without broadcasting real transactions to the mainnet, and without waiting to discover a bug only after a customer encounters it at 2 a.m. on a Sunday. Transaction simulation on Solana is not new at the RPC level. It's been available for developers who know how to access it, but baking it directly into a payments-focused portal, making it part of the onboarding experience for merchants and enterprises, and designing it to model complete end-to-end flows including checkout, confirmation, and settlement, that is a different thing entirely. The simulator models end-to-end flows so teams can validate checkout, confirmation, and settlement behavior before going live. Think about what that means in practice. A development team building a payroll system that distributes salaries in USDC can walk their entire payment pipeline through the simulator, catch edge cases, verify the transaction references are mapping correctly to off-chain invoice IDs, and confirm the settlement behavior is exactly what they expect, all before a single real dollar moves. That's not just convenient. For institutional clients with compliance requirements and reconciliation obligations, that is a prerequisite. It's the kind of feature that converts a "maybe we'll explore this" into a "let's schedule the integration." And who is actually integrating? Here's where the credibility argument becomes almost overwhelming. Solana's infrastructure is already being used in production. Not in pilot, not in testing, in production by Visa, PayPal, Stripe, Western Union, and Fiserv. Let that list sink in for a second. These are not startups willing to take a flyer on experimental technology. These are the entities that collectively process the majority of global commerce. When Visa settles transactions through Solana native USDC, when PayPal routes PYUSD through this network, when Stripe builds payment rails here, that is institutional validation of the highest possible order. Visa's story on Solana alone is worth unpacking. Visa launched USDC settlement in the United States, marking a major milestone in its stablecoin settlement strategy to modernize the settlement layer underpinning global commerce. Initial banking participants include Cross River Bank and Lead Bank, and broader U.S. availability is planned throughout 2026. What makes this remarkable is what Visa is actually changing about how banks operate. Traditionally, interbank settlement happens only on business days. Miss the Friday cutoff and your money sits in limbo through the weekend. With Solana-based USDC settlement, banks get 7-day availability. Settlements happen on Saturday. They happen on Sunday. They happen on Christmas. And according to Visa, their monthly stablecoin settlement volume had already passed a $3.5 billion annualized run rate as of late 2025. That number is growing. And fees? Payments on Solana commonly clear with median fees near $0.001 and confirm in roughly 400 milliseconds, enabling card-like speed without intermediaries. The average transaction fee on Solana is approximately $0.0058, compared to $0.015 on Base, making Solana 62% cheaper on a per-transaction basis. When you're talking about a merchant doing thousands of transactions per day, or a payroll system distributing payments to 10,000 workers, or a remittance platform handling hundreds of millions in cross-border transfers monthly, that fee difference is enormous. And it's not just payments between humans that Solana is capturing. According to Solana developers, the network holds 49% of the micropayments market between AI agents based on the X402 protocol. AI agents transacting with each other autonomously, paying for data, for compute, for services, is a market most people haven't started thinking about yet, but it's already happening on Solana. The speed and cost profile of this network make it the natural habitat for machine-to-machine commerce at scale. All of this is landing at a moment when the regulatory environment has shifted dramatically. The Genius Act, passed in July 2025, established the first legal framework for issuing and managing stablecoins in the United States. For the first time, institutions considering stablecoin integration have legal clarity on reserve requirements, reporting obligations, and anti-money laundering compliance. That clarity removed one of the most significant barriers to institutional adoption. And it's no coincidence that immediately following that legislation, you saw a wave of major financial players accelerating their Solana-based product build-outs. JP Morgan creating a Solana-based token for a debt offering. State Street and Galaxy announcing a tokenized private liquidity fund on Solana. Wisdom Tree bringing its full suite of regulated tokenized funds to the network. This is Wall Street coming to Solana, not the other way around. Now, stablecoin supply on Solana has reflected all of this activity. Stablecoins on Solana reached a market cap of over $14 billion by the end of 2025 and remained steady, Since then into early 2026. USDC represents 55.7% of that, cementing Solana's identity as the USDC native chain, which matters because USDC is the stablecoin of choice for institutional and enterprise use cases. And all 10 of the leading stablecoins globally now issue natively on Solana. 10 out of 10. That's the entire stablecoin market represented on a single chain. So what does the Solana payments portal represent in this broader context? It's the formalization of an argument Solana has been making through action for the past 2 years. The network has been quietly, methodically building the rails. Getting Visa, getting PayPal, getting Stripe, getting Western Union to build on top of it. Proving the throughput, proving the uptime, proving the fee structure. And now, with this portal, it's creating a front door. A clean, organized, enterprise-ready entry point that says, here is everything you need to build on us. Here is the documentation. Here are the reference implementations. Here are the companies that have already done it successfully. And here is a simulator so you can test your entire payment flow before you touch a single real dollar. The timing is deliberate. The stablecoin regulatory wave is cresting. Institutional interest is at an all-time high. And competition between chains for enterprise payments infrastructure is intensifying. Solana is not content to win on technical specs alone. It wants to win on developer experience, on enterprise readiness, on the quality of its documentation and tooling. The payments portal is Solana making a direct statement to every developer and CFO sitting on the fence. The infrastructure is here, it's battle-tested, it's backed by the largest names in finance, and now it's easier than ever to plug in. Is Solana perfect? No. Wallet user experience still has friction. Some QR code flows in Phantom have triggered warning prompts that confuse end users. Compliance teams are still building out their KYC and reconciliation frameworks for on-chain payment rails. These are real challenges, and the industry is still working through them. But the direction is unmistakably clear. The institutions that needed regulatory clarity have it. The developers who needed a unified integration hub now have one. The enterprises evaluating on-chain payments have a simulator that lets them de-risk the integration process. And the underlying chain is processing $2 trillion in quarterly stablecoin volume with sub-second confirmation and fees that round down to essentially zero. The Solana payments portal is not just a product launch. It is a declaration. It's Solana planting a flag and saying, this is where global commerce settles. And judging by who's already building here, the argument is becoming increasingly hard to refute. Now I want to hear from you. Do you think Solana has what it takes to become the primary infrastructure layer for global payments? Is the transaction simulator the kind of feature that actually moves the needle for enterprise adoption? Or is wallet UX still too rough to break into mainstream commerce? And what would it take for you personally to start using stablecoin payments in your own business? Drop your thoughts in the comments. This is a conversation worth having right now, because the decisions being made in 2026 are going to shape how money moves for the next decade.